Alrighty guys, so welcome back. We're gonna be going live here a couple days a week. I felt like I should start going live. I feel like it's a fun way for us to kind of stay connected. But let's wait for a couple people to join in here. So we do have a couple stocks here already that we're gonna be going ahead and looking at. We got ExxonMobil that we want to start looking at. Then we want to look at RCI, VU, a variety of others, to be honest. It says we are offline. I'm not sure if we're good. If we're good, someone comment. I think we're good. I'm not sure. I haven't done a live stream in quite a bit. So all right. Well, I'm pretty sure we're good. Let's go ahead. Alrighty guys. So let's look at ExxonMobil. So as you guys see here, I do have one share with them. I'm up just over $8 on it. Nothing huge, to be honest, but definitely a nice little stock here to have. Let's go ahead and see what we got. Alrighty guys, so let's go ahead. Let's bump this out. Pop out chat like that. Alright. Hold your horses. I know guys, I know. I just haven't gone live in such a long time that I forget how to do it. And then this. Let's go ahead. I want to make it so you guys can see what I'm doing and I can see any questions that you guys may have. How's that? A little more about that. All right, so the very first stock we're going to look at here is ExxonMobil. We got Exxon, VU, Ford, a lot of other companies. And if you guys want to go ahead and ask, company you guys want me to look at, all you got to do is go ahead and leave them in the comments here. So we got ExxonMobil. Like I was saying, I do have one share of it, just up roughly $8.30 here, which is pretty nice. And one thing about Exxon here is we got to look at oil prices. And the thing about Exxon is I feel like this company is strong. I feel like this company has a lot of cash. This company is one of the better oil companies. If you compare it to like BP, BP is definitely in a world of hurt. I feel like they don't have a lot of capital, and then especially right now, just because everyone's in this world of unknowing, and I feel like Exxon's going to be one of the top performers to come out of it. I feel like we're going to have a handful of oil companies to actually get that. We'll be able to get through this hard time. So do I think it's a buy right now? Realistically, I think we're going to have this little double tap here. So the stock's going to come down just like it did. It's going to come back, and then it's going to come back down to the old support here. Right here, and then realistically the support line right here, I don't know if it will be strong enough. I feel like it will continue to fall down just a little bit more. So I feel like is it a buy right now? No, but is it gonna be a buy? I feel like around 32 to 30 bucks, that's a fair price for it, and that's going to be about a 20 on the RSI. What's going on, Trevor? So yeah, ExxonMobil, I feel like we got to wait for it to kind of come down to at least 30 bucks. So what I would do is I would just set an alert here, left click, go down to create an alert, I would go to below and then create. And then the cool thing about TD is you can always move your alert. If let's say you want to bring it up to 35, you can just replace it just like that. So now what stocks did you buy? But Yeah, so I feel like right now with ExxonMobil, I feel like we got to at least wait for some sort of pullback. I know it's pulled back compared to the highs. You know, the stock used to be trading at $95 and now it's at 40. So yeah, it is down, 35, 37%, but realistically it could definitely fall more. All right, let's go ahead and move on to VU. So VU is just a Vanguard's S&P 500. This is just like the top 500 companies on the market. I made a video yesterday on this. What I think is going to happen with this one is very similar to Exxon. I'm worried. I'm worried about Exxon for a couple of reasons because I can almost guarantee they're going to cut their dividend. Just a matter of time because they don't have a lot of capital. But I feel like this is going to come down just like it did, come back up. And a lot of people are saying, well, it's going to come back, just like it's going to come back up to the highs. And, I do see where you're coming from. But the fact is unemployment's hitting record highs. And unemployment's hitting record highs. And I feel like we don't know exactly where the market's going. So buying into VU would be kind of missing a better opportunity to actually purchase stocks. So if you had $20, which stock should you invest right now? That's a hard question. I mean, $20 is a good spot to kind of start. What I would recommend doing is if you are learning to invest, I would invest in education first. Take that $20 and go. Actually, you can buy Principles by Ray Dalio. It's a fantastic book, and this book has definitely made me over, a couple $100. But if you're just looking at stocks, it's hard to say. I feel like there's a lot of great companies. I feel like Penn. Penn's a stock that I have. I'm up roughly 49% on it with only 2 shares. So I'm up $10 and my average price is $9. So this stock bought Barstool Sports. They bought 37% of Barstool Sports, which valued Barstool Sports at roughly $420 million. And they own a lot of casinos. They own a lot of things. And the stock has been slammed down. So I do feel like this stock is definitely valued around $26 and $28. So with it at 14 right now, I feel like there's a nice little possibility of it pushing up. So yeah, Penn's a great stock to actually have. It would be nice too is I feel like once this whole coronavirus is done, I think we will have Penn start offering dividends, which would be a nice little perk on top of this. But looking at trends, the trend is your friend. And so before this whole coronavirus, people were gambling. People were, they were making a lot of money. Penn was definitely making a lot of money. If you go ahead and actually look at these earnings reports, they beat expectations most of the time. And right now it's definitely undervalued. So I feel like getting into it, even at, $11 to $10 would be a nice little buy. Yep, no problem. So yeah, looking at a couple others here. A lot of people wanted to look at Disney. And I did make a stock review on this. So if you guys want to go ahead and check that out, that's you just got to go to stock reviews in my channel. And I do have a couple of Disney, to be honest. So the cool thing about Disney right now, so as you guys see, this whole thing of the whole virus, you guys can see it's hurt Disney, but it hasn't hurt it too bad. It is down just over from the highs. It's down quite a bit. It's down 45%. But from just the average prices right around here, it's only down 30 in the 30s. So Disney. So they did cut their you guys can't. So they did actually cut all resorts. So a lot of people aren't being able to go to the sports there. But the cool thing about Disney is they just have their Disney Plus service, which is phenomenal. They hit 50 million subscribers, which at $7 a month is how much it costs. So that's $300 million per month that Disney's getting, all passive. So all these movies that they've already had pretty much just in storage, they're now getting $300 million per month, even in these hard times, because they just released that a couple weeks ago, which is pretty cool. And they still have their dividend, and they have one of the most cash on hand of any company, other than pretty much Apple. Apple has billions upon billions of dollars in cash, but Disney's pretty high up there as well. So Disney, I feel like, is a fair buy even at 106, because I feel like it's definitely valued around 140. They own ESPN, they own Marvel, Lucasfilms, which is the whole Star Wars franchise. So that's pretty nice. Oh, what's going on, Dad? But yeah, so I feel like Disney is a fair buy even at 106. And the cool thing is, guys, is if it falls back down to 80 and you get in at 106, you can average your price down to about $93 if you just buy 2 shares. So, I have an alert here set at 79 because that's where that support is. So that's where the stock got bought up. So around $79 is definitely a fair price to get into the stock. And they have a dividend of around 2% per year. Moving on, we got Coca-Cola. So cruise ships. All right, let's pull up CCL, which is Carnival Cruise. So Carnival Cruise, you guys can see we had before. We got to look at a couple of things. So Carnival Cruise, they're going to be around. They have money, but the thing about them is their expenses are pretty high. They have $12 billion in what you call it, their expense ratio. So what that means is their expenses are $12 billion and their profit is only, from that 12 is about 16, something like that. So what that means is they need to cut about 75% of their expenses to be profitable. And do I think they can do it? Yeah, I think that they can. And the fact that I think they can is because people aren't going on ships. So all these ships, they really just need to pay for storage and to keep maintenance up. And they're not going to be traveling and doing a whole bunch of stuff they normally would do. So fair buy. It is definitely looking at it at the RSI. It's at a 25. So what that means is it's definitely undervalued. So do I think getting into it around 12? I think that would be still a fair deal. Because I think the stock could definitely, within a year to a year and a half, could definitely come back up to around 35 to $40. So that's a nice little, 45-50% return just from that. So cruise lines, I think there's definitely still a lot of money to be made. And people always say, why didn't they get the stimulus money? They employ a lot of people. And I did some research on why they did not get their stimulus checks. And the reason why is because they don't pay any taxes. They don't pay any U.S.-based taxes because they're out of the Bahamas. So that's pretty much why they did not get any stimulus money. Do I think they'll go bankrupt? Probably not. I really don't. It's like buying this stock all the way back in the 90s. So I think risking $12 to possibly make $40 to $50 is definitely a fair trade in my opinion. So, yeah. What do I think about Bitcoin? I'm not a big Bitcoin guy. I don't know. I did actually a little research today on it. What is it? XRP or something like that. I'm not exactly sure what it is, but it's a pretty much just a cryptocurrency that a lot of banks are starting to use. I'm not sure if you know that, but that was the only one I was really looking into. I'm not a huge Bitcoin fan. I don't think Bitcoin will live up to its hype. That's kind of my thought on it, and I don't know if you want to go ahead and let me know what you think. I have some opinions on that. So, what do I think will happen to the stock market if Joe Biden wins presidency? Oh, I'll draw it out. So let's just pull up the S&P 500, which is, we all know the S&P 500. the top 500 companies, and Joe Biden. I'm sure you guys have seen that video of him not being able to speak, but this is what I think will happen. So we've had this nice little rush here, okay? And then we had this little dip right here, which is expected. You know, people are unemployed, you know, whatever. Joe Biden. All right, let's draw it out. Let's draw it out, guys. So right here, I think this S&P 500 could definitely just go like that. I don't know if he would be the best candidate for the market. I just am not a big fan of the guy. I think he needs to focus on public speaking before learning to become a president. But yeah, so that's my overall opinion on that. So yeah, so that's pretty much what I think about it. Moving on. What is it? RCI? Somebody wanted me to look at? Yeah, this must be it. Rogers. Okay. All right, so we have really resistance here at $55. So let's draw that out. The very first thing you guys got to do when you see a stock is draw out support and resistance. So resistance is where a stock has a hard time breaking above it. And then support is where the stock gets bought up at. So up here at $20, right here, and then right here. So what I just drew is resistance. So the stocks hit it and sold off, hit it and sold off. And then support for the stocks hit it and got bought back up. Hit it right here and bought back up. Came in contact, hit it, bought back up. Came in contact with it, bought back up, here, bought back up. So we have a very nice support here at $32. So just by judging that, do I feel like a fair buy would be at 43? No, I think getting into it maybe around 30, 31, there could be definitely a possible swing trade on this for sure. So set an alert here at roughly 32 would be pretty nice. So create an alert. We want it at or below. We can just go 32.50. Just like that. So now we got that alert set. We're ready to rock and roll. Moving on, Apple. I don't know why you guys wanted me to do stock reviews on blue chip stocks, but I don't mind because Apple's a powerhouse stock. I mean, it's one of the best stocks you can own, especially for long term. But all right, so let's go ahead and look at it. So Apple. One thing about Apple, guys, is I feel, this is me personally, I think Apple could definitely fall to 91. And the reason why I say that, and I say that with definitely a grain of salt. You guys have to understand that Apple, this is all my opinion. You know, nothing that I'm saying is stuff that I'm saying you have to do. It's just my opinion. So the thing about Apple here is you guys see this yellow line. This is what you call a 200 moving average line. And if you guys look at it, every time the stock has hit it, what is it done? It's hit it and bounced. Hit it and bounced. Hit it and bounced. So now we've had this huge buying pressure, guys. This huge buying pressure, just like this. Okay? Buying pressure. Now, looking at the RSI, it was way overextended. So what this means is the downside is enormous. We really haven't seen too big of a fall from this stock. I think that this stock definitely could come in contact with this 200 moving average again. I think it should, and I think that would be the best time to buy. So that's why I have multiple alerts set here. And do I think Apple is a good company? I think everybody should own Apple. They have a lot of cash on hand, which means they've saved a lot of money. They have money for dividends. They have money for recessions. They have money to just have. And I think that is a cool little perk here. So Apple, I feel like, isn't going anywhere. I think getting into it around 200, even at 220, would be a fair buy. I think everybody should get in around that price. Do I think the market's going to fall? I made a video yesterday on it, and I think it should, and it will. Unemployment is hitting record highs, and I think the Fed is dumping trillions of dollars into the market to to keep it alive. And I think that the thing about this is I think once people start going back to work and doing the things they normally do, the market's going to rebound. It's going to have record gains. People are going to come back in a roar. But I think that right now, I think it's definitely a little over bought there. So I think downside potential is huge on just the overall market, guys. How many people are watching? Oh, crap. We got 8 people? Nice. I was not expecting this many people to actually come on. But, yeah, we're going to start doing these stock reviews live. So if you guys want to ask me any questions, go ahead and ask them here. I'll throw in the Discord group chat here so you guys can see it. Whoops, I don't know where it is, to be honest. But, yeah. Oh crap! I don't know what just happened. Oh, there it is. Okay, all right. I'm not used to going live, guys. I'm used to just making reviews. But if you guys like me going live, make sure you guys hit that like button so I know. So let's do some more. Let's look at Coca-Cola, which is ticker KO. I do have a little bit of Coke. Let's go ahead and draw and see what I have it at. I have it at $42. I am up roughly $12 on this. And Coke, dividend paying stock, fantastic stock to have. Looking at it right now, it is kind of climbing its way back up, very similar to all the stocks we looked at other than RCI. So I think getting into the stock at around 42, pretty much where I got in, is definitely a great buy. And I think getting into it in the 30s, if you can get the stock in the 30s, you're looking strong. So set an alert here at 38. That's what I'm going to do, just so I know. So you want it at or below 38. It doesn't matter what price. But do I think that this stock's going to go around, or do I think the stock's going to die? No. This is one of the best dividend-paying stocks that you guys can have. Coca-Cola owns actually quite a lot more than you guys think. They own a lot. Same with Pepsi. Pepsi's the same way. They own, a lot of companies. So that's pretty cool as well. So here, let's go ahead and just do what we normally do. Draw out support, resistance. So we have really resistance rate. The thing about it is it's slowly been climbing up. So, I mean, resistance is probably around 50, I would say 50 and 60, right in this range. And support is definitely around 38, 36. Yeah, about right here. That's where I would consider the support, because that's where it's hit it right here. Yeah. So what I'm doing, if you guys don't know, is I'm looking at price points of where the stock has bounced. So we've seen it bounce here, 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 and then here. So definitely it would be a good buy too at 37. But yeah, I feel like that's a good buy, Ford or Coke. Let's look at Ford. Hold on, I'm gonna take a quick sip, guys. I'm gonna pause my mic. If you guys want to go ahead while I'm doing this and ask me a question, that'd be great. All right, are you guys there? All right, sorry, I didn't want to drink on the microphone because I know a lot of people don't like that sound, and I don't either. So, all right, let's look at Ford. Ford. The thing about this, guys, man. The thing about this is let's look at the news here. So how you do is you just gotta find the news tab, live news right here. Let's move this over here. Ford just released their earnings. I want to just show it to you. And right here. I'm pretty sure. Right here. Okay. Well, what this is pretty much saying is that they missed their earnings report. Okay, that's pretty much what I wanted to get. But they missed their earnings report, and why are they still alive? Why aren't they dead yet? Because the coronavirus. I know a lot of you are saying, how is that even possible? And the reason why they're alive and they're not dead is because they've been making ventilators for people. and for hospitals. And I think that is a good thing for the company to do. It's keeping them afloat. And do I think risking $5 for it to come back up to 10, because that's kind of where it trades? You guys can see it's kind of bounced in between this little thing, but going down. The thing about Ford is they're a good company. Do I think they're going out of business? No, but their debt to income is pretty high. That's why it's the price it's at right now. And they cut their dividends, so all the investors that own their stock, they're not paying them. And Ford has always been the company that has been known for those nice dividends, for that consecutive growth, and just overall being like a good company to have. And since they cut their dividend, that kind of made the stock fall even more. So I think that getting into this stock, if it comes back down to 4, I think that'd be a great buy. And I think they're gonna once this whole thing comes and is over, the stock's gonna be back up to around 8, and that's gonna be kind of where it stays for a little bit until they get back on their feet. But if you compare it to like Tesla TSLA, I think, yeah. So the thing about Tesla, guys, Tesla TE. I don't know their tickers. I always get them so mixed up, guys. That's Tilray. What the heck? Thought it was TS. Oh, TSLA. Is that it? Yes. Okay. Oh, gosh. The thing about Tesla, guys. All right. So right now it's up 10%, which is fantastic. This stock is so expensive because it's representing the future of the company and not the past. That's what Ford doesn't have. Is Tesla's overall goals is to make affordable electric vehicles, cut emissions, and the cool thing about Tesla, they spend $0 on advertising. 0. The reason why they do this is because they can make the top line cars. They wanted to have the same marketing approach of like Lamborghini, of Ferrari, where you don't see Lamborghini commercials. You don't see Ferrari commercials. You know of them because they have great product. And that's the same approach Tesla wanted to have. Right now, I think it is kind of coming up to a little overvalued territory. I mean, it's at $700. I literally just got in at $550 with 4 shares, so I'm up quite a bit. But so I think the stock definitely should fall a little more. I mean, they cut production there where they make them. They have a plant in China, which I think is starting to come back up, but the one in California isn't working. The one in Texas isn't working because they stopped their production there. So I think with the stock moving up, it's pretty much for no reason other than they're making ventilators. Let's go ahead and see. All right, so the stock's rallied up 60%. Well, I know a couple. Oh, right here. Okay. So they're expected to sell 400,000 vehicles this year. Okay, I mean, see, why is this up? Why is this stock up? See, this is what I mean by overvalued. So analysis said that they suspect Tesla to sell 400,000 vehicles this year, down from their previous expectations around 550,000. So when analysts are doing this should make the stock go down. This is why I don't understand why it's up so much. But who knows? Who knows, guys? So do I think getting into this stock right now? No, I think wait for it to fall right around this support line. So the thing about Tesla is you guys see this resistance. It's clear as day where the stock can't break above 392. So when the stock's doing that, when the stock breaks above it, this old resistance is now the new support. So now when the stock came back down, it hit this old resistance line right here and got bought back up. So set alert here at 382. If it falls to there, buy a couple shares. And if it doesn't, I think it's still getting into it around 450 is a great buy. So at or below, great. So if you guys have any questions, guys, make sure you guys ask them. I would love to actually go ahead and answer any questions that you guys may have. You know, I'd hate for you guys to not learn something this episode, because we're not filming a video today. This is kind of the video I wanted to have. We're gonna do this about once a week, I think, maybe once or twice a week, depending on whatever you guys want to do. But let's see. I had a whole list of stocks to do, but what about Microsoft? Okay, yeah, let's see. All right, hold on. I'm just making sure we're up here. All right, so Microsoft. What is Microsoft's ticker? What is it? MS. Okay, right here. All right, Microsoft. I compare Microsoft to Apple quite a bit. And so let's look at everything we always do. We got to look at support lines, trend lines, resistance lines, RSI lines. Just memorize those steps on how you guys, because then you guys can do your own, stock reviews. That's the overall goal I want to teach, is how to do your own. So let's look at it. So we have resistance. We have multiple resistance lines. So there's one about here and here. All right, so this is a nice support right here. So you guys see it. It's hit it right here a couple of times, and then it's hit it right here. So that's a great support line. Resistance right here at 190. 190, yeah, about right here. We can just draw it out. So this is where the stock has a hard time breaking above. So now everybody is saying we are going back up on this V pattern. So the V pattern's just like that. Nothing more, nothing less. So now, do I think getting into this at 172 for it to go back up to $90? And the downside is let's do a quick asymmetrical risk reward analysis. So what this means is we're going to see how much this stock we're going to risk to make. So we're going to risk roughly 8%. That's the ideal profit, is around 8%. Okay, because if you bought in right here at 72, the next resistance is at 190. That's what I'm looking at. And the thing about that is it's climbing up to overbought territory. So now the downside is even more. So now we're going to be risking 20 to 30% for it to come back up. So now the downside is it coming back to the support line. So now, do I think getting into at 172? I think that wouldn't be the best opportunity to actually buy. I think it's a waiting game right now. I think the thing about the stock market is 90% waiting and emotion. 5% is buying and 5% selling. It's as easy as that. So what this means, guys, is I think getting into this stock at 172 is decent. I think it's not the best, just because the downside, it could come back down to 130 pretty quick, just like it did right here. So I think, should we wait for it to come back down to in the 40s? So now we're risking 2% or maybe about 6% to make around 34 to 40%. I think that would be a lot better. So I would just set an alert here at 140, just because Microsoft and Apple, they're shutting retail stores, they're shutting production on a lot of their product, and people aren't able to buy their product. They can't afford their product. So I think that with these companies coming back up to their highs, it doesn't make sense. So this is valuing the company right now, even though it hasn't released earnings report. It hasn't released their first quarter earnings. Who knows how much capital they have? I'm sure they have quite a bit, but that's not the point. I just think it's overbought, and I think it should fall down. So I would just set an alert here at 140 and just leave it. I would just not worry about it. I think that would be the best opportunity to actually get in at a great price, because that's a nice overall resistance line right here. So that old resistance could be that new support, which could push it back up. And I would wait for all these companies to announce earnings. I think that would be a nice little perk here as well, guys. So do you guys have any more? I that's just my opinion, guys. I mean, I know a lot of you are probably thinking to yourself, well, I want to get in, I don't want to miss out. And like I was saying, 90% of investing and buying stock is emotion. It's emotion and waiting. So I just don't think this is the best opportunity. I think there's a better short side to be honest, than a long side. I mean, you know, because short side you're risking this 8% to make 24. So that's what I'm thinking. I'm right now I'm kind of in between being a bear and a bull because I'm really trying to focus on dividend investing and building up a dividend portfolio. And this is definitely a good stock to have. I just think right now at 170 is overvalued. I mean, let's look at McDonald's. What is it? Whoa, why isn't my MC? I don't even know it, man. What is McDonald's ticker? Wait, we gotta change this up real quick. Do you think it's the right time to sell Microsoft stock? Are you looking for it to be long term? What are you looking to do? Because long term, I mean, I wouldn't worry about it if you have long term. I would just if you're looking long term, if the stock falls, then just average your position down. It's going to be the same. And you're going to have, when the stock market turns around, your average price is going to be lower. Your average price is going to be around 155 if you get into it around 140. And so when the stock breaks above 155, you're in profit compared to 172. That's what I would do if you currently have. I wouldn't sell if you're already in it. I would just average your position down. How many, do you have a lot of shares? Because there's a lot that goes into it. I mean, if you're talking you have... do you use Robinhood? I think Robinhood is a great app for beginners. They're announcing their DRIP program this year, which is the dividend reinvestment. They're great. They're coming out with fraction shares. Do I think Robinhood is great for day trading? No. But do I think it's great for beginners? I think it's amazing for beginners. You can get free options. You can get decent charts, and I think Robinhood is a pretty easy way for people to make money that already have a job, and they don't have the luxury of staying home and actually looking at TD Ameritrade's charts, and they just want something easy and does the job. So I think that's what Robinhood does. Yeah, then I would recommend Robinhood. You don't day trade? Yeah, I would recommend it. Swing trading, you can do it all day. Yeah, you're 14. Yeah, don't worry about it. Yeah, just use Robinhood. People make a ton of money off Robinhood. I just think if you're going to be more in tune with the market, meaning you're going to be day trading, then you need a little faster broker. And I think you're fine. I wouldn't worry about it. You're only 14. Don't worry about it. You can always change it. You can always say, the thing about all these brokers, guys, is if you're like, oh, I don't like this anymore, you can send it to another broker. You can send all of your stocks you have to another broker. It costs a couple bucks and you're good to go. I wouldn't worry about it, guys. I really wouldn't. Yeah, so do you guys have any stocks you guys want me to look at? We hit all the ones on the list that we wanted to do. What's another one? I mean, we could look at Uber. Are you guys down to look at Uber? This is the thing about this, the stock is, I don't know how their balance sheet works and how much debt they have. So I don't know. $13. All right. So, and this was a recent IPO. I remember when this happened. All right, let's do this to make it a little cleaner. All right, so now looking at the stock here. All right, okay, I got it. I got it pretty quick. So you guys see this yellow line here? How much? Okay, hold on. How much is a good amount to make money off dividends? How much is a good amount to make money off dividends? I started 5 days ago. I look at anything that has over, a 2 to really 6% dividend yield, which is pretty good. Anything higher is more risky. Those are probably what you look at, like REITs. I mean, if we look at NLY. This stock is a REIT, which means it owns real estate, and they have to pay 90% of their overall revenue to their investors. That's what that means. And so right now the made $439 in 15 minutes this morning trading GLD. I think that's gold. Good job, man. That's awesome. I love hearing that. That's sweet. Made that's like working 40 hours at $10 an hour for a week. That's awesome. Congratulations. But getting back to the dividends here, so these REITs, they have to pay their investors 90% of their revenue. So when they have to pay that, it's just like it's like literally more risk, just because they don't, all these real estate stocks and all the real estate that they have right now are commercial. So these are like Walmarts, these are like Walgreens, these are like 7-Elevens, because I did research on NLY and that's what they own. So now imagine having a REIT in this coronavirus, so people aren't going into these stores and those stores aren't being able to pay rent. So what is NLY gonna do? I don't know. I mean, I own quite a bit of them. I own 40 shares, averaging my positions down, because I think it's decent long term, but it's still kind of one of the regrets that I kind of have is not selling when it was, up here, and I looked at it. I had a nice swing trade, averaged my positions down to about $5 or $6. So I'm down, $60 or $70 right now on this, but I don't know. We'll see long term with this. I know it's definitely a little bit of a riskier stock to have, but if you compare this to like Visa, which has a dividend yield of around 1 to 2%, I think this is definitely a better long-term growth stock. How long did it take to get your Robinhood debit card? Did you have to spend money to move up on the list? No, I didn't have to spend money. It came in like 2 or 3 months. It took a little bit of time. Hey man, what's going on? Welcome to the stream here. But looking at Visa here, Visa has that yield. It pays that 30-cent dividend. Oh, nice. You got some Roku stock. Congrats. Nice. That's awesome. So they do pay that dividend yield of around 30 cents. And the thing about it is it's definitely a lower amount on the dividend yield, but it is definitely a more of a long-term growth stock. If we go ahead and look at the, the max available here for the time frame. So you guys can see this is a fantastic growth. All it did was find support at the 200 moving average line. And then it's good to go. So that's why I have that alert set right here. I think that's a good buy at Visa at 136. Which one? SLG. SLG. So it looks like it did gain a lot of hype here and kind of fell all the way back down at $7.75. Slowly been growing up. All right, so let's look at the trend before Corona and draw out support and resistance. All right, so we got some resistance here. I'm sure you know at $95. Support here at $75. Tesla at 700. And I know I got 4 shares of Tesla at around 520. I'm up a killer amount right now, but it's insane. It really is. So okay, so this right here it hit a 20 on the RSI, kind of traded in between here, resistance. Okay, so the thing about this one, the only thing I don't like is before Corona. Look at the trend. Jeez, I can't click. Look at the trend. This was before the virus. So now just imagine what this virus is going to do to the company. I'm not sure exactly what they do. What are they, a REIT? Yeah, that's what it looks like with all the dividends they have. So I feel like this is what I would do. I kind of like this company, to be honest. I think that this is a decent company. setting alert. I'll throw an alert right here. This isn't an A plus, stock to have. Do you think Tesla will? Yeah, I do. I think the whole market's gonna dip again, whether it's a week or so. I think with unemployment, with companies not even having their earnings released yet for the first quarter. I mean, we talked about Ford a little bit ago, and their earnings got slammed, and the stock kind of did the same thing. But yeah, so I think setting alert here at $40 would be a nice little buy. This is definitely more of a dividend stock compared to like a growth stock for sure. And so I think if you get into this, at or below $40, can't go wrong with a nice little $40 buy on this stock all day. That means the RSI would be around probably a 20. You should have it where it had, once you go on the app, it should, here, hold on, I'll pull up mine because I think I still have mine up. I got to get going here in about 3 minutes, but we can do one more. Hold on, I'm trying to find where it says their dividend. All right, so I'm just glancing at Apple here. Okay, so click on the company you want, scroll down to stats, and it's going to be the bottom right, and it's going to say dividend yield, and that's it right there. All right, Wix. Oh, I just looked at Wix actually the other day. This is going to be the last one we're doing, guys. Yeah, this is the one. So very nice growth, and then we had this nice little sell-off. And then it continued to rise up. Set an alert right here. There's this beautiful, beautiful support here at $94. The thing that I like about this is now there's going to be a price support and a moving line support. So that's going to be, but I want to know how much I get from it every month. Hold on. Let me create an alert here, okay, brother? And then we can do it. Then I'll show you. So I think this is good company. I actually just looked at this the other day. So I think getting into this stock here at 94, you can't go wrong with it. You're going to risk, you could risk $4 or even you could risk, $4. So if let's say you just set stops at like 85 and if it hits it and bounces, then your possible reward is for it to go back up to the highs or at least these moving average lines, just like it's doing right now. So you're going to risk a little. I think it would be a great buy right there. All right, so how you want to know how much you get monthly? So what I do, because I use TD, they have, look up dividend. Go on like Google and look up dividend income calculator. I'm pretty sure that's how I do it. Calculator, something like that. I mean, you got to just, I think Excel has something that you can do too. I mean, you can do it with a dividend income calculator to figure out how much you get. And if you have it, since you're using Robinhood, it's harder to say. I mean, dividend.com, they have that calculator as well. So you just got to put in all that information about the stocks and you should be good. Trust me, guys, I think dividend investing is fantastic, and I think dividend investing and overall swing trading and day trading, everybody should know, especially working from home. I mean, you don't even have to stress out really about working just because you have this other skill that pays you. I'm trying to find it, man. I know there's a dividend calculator out there. You just if you want to, go on my Instagram and I'll look for it when I get off and I'll send it to you. Okay? It's called Investing with Carter is my Instagram. So you can go on. But all right, that's it with the live stream. I hope you guys enjoyed it and I hope you guys had fun. I hope you guys learned something. And if you have any questions, you guys can go ahead and DM me on Instagram, Twitter. I'll get back to all of you guys. Remember to always stay happy, stay positive, and overall, guys, biggest thing right now, stay safe. I don't want to hear that some of you guys are getting sick. Stay safe, stay inside, and make some money. Take care, guys.